All right, how's it going, everyone? Welcome back to another Cup of Joe investing video. Today, we're going to talk about Amazon and Google stock. They both reported earnings yesterday. Two of the biggest companies in the market, two of the biggest companies and the most used companies in the world. I want to start off this video before getting into the numbers and details by reminding everyone that Amazon is essentially the Walmart of online. I don't know about you guys, but every time I need to buy something online, the first place I check is Amazon, not only because they have every single product, but also because they usually have it at the best price, as well as when it comes to search engines, unless you live on the planet Mars, you are using Google in order to learn and search for new things. Who uses Bing? I don't know. I don't know how it's still here. I don't know how Yahoo is still here. As far as I know, everyone uses Google. And I also want to talk about YouTube. YouTube is probably the most underrated entertainment platform in the world right now. Of course, you're watching this video on YouTube, and that is amazing. However, there are still millions and hundreds of millions of people that have no idea about YouTube, and will soon find out that just like you can Google anything and find out more, you can YouTube anything and actually watch a video about it. Hopefully, you searched on YouTube for Amazon and Google stock, and maybe you found this video, which is great. So after prefacing that we have to remind ourselves how big these companies are, let's get into some of the numbers, starting off with Google. So Google reported revenue of $27.2 billion, and that is up 22% year over year. However, they did slightly miss revenue because analysts were expecting $27.33 billion when Google reported $27.2 billion. Cry me a river if you're really selling or buying Google stock based off of a slight beat or miss, then that is crazy. However, earnings per share came in for Google at $13.06 versus analyst expectations of $11.06. That is a huge beat. That is an amazing beat for Google. And essentially, what that means is that their earnings compared to all their outstanding shares is more than what analysts were expecting, and that is a good thing. Mainly, all of this revenue and EPS growth has come from ad revenue growth from YouTube. If you don't know, YouTube plays an ad every time you watch a video, and the more time has gone on, the more people are watching YouTube videos. Thus, a lot of larger companies are now starting to sponsor videos on YouTube ads. Not only because you reach a large audience, but also because of target advertising. Just like Facebook platform offers target advertising, YouTube platform does the same thing. And now companies such as Ford, such as Louis Vuitton, and many more are taking the YouTube video ad space seriously, and thus ad rates are going up, and in my opinion will continue to go up for many years. Also, more people are using Google on mobile. The CEO said that this was a big shift in revenue. As we know, mobile is not a new thing, but searching for Google on your phone is a lot more convenient than searching it on the computer. And many times when people are wondering something or want to know something, especially in the spur of the moment, you just pull out your phone, hit out Google, and get your answer in seconds, and that is an amazing thing. However, you would think that after these great earnings and from such a great company, Google, that more people would be interested in the stock, that it would be a strong stock. Now, Google is a very strong stock, but as many other stocks right now, they have been hit hard by the correction. They used to have a 52-week high about 3 months ago of $1,250. Right now, their share price is at $1,070, and it is actually down after earnings. And what really scared investors is, number one, that when Google was called to Capitol Hill with Facebook, with Twitter, they did not show up. This either means that they do not care and are not worried about Capitol Hill and regulation, or they are extremely scared and worried, and that's why they didn't even show up. I mean, what do you have to hide? Why? What? Facebook is there, Twitter is there. What kind of announcement and public figure is Google showing right now by not going to Capitol Hill when the government wants to talk about regulation? I don't know what Google knows about everyone, but I'm sure they know a heck of a lot of information. Also, the Pixel 3 just came out. As you know, that is Google's flagship smartphone. However, just like every other smartphone in the market, it is borderline impossible to compete with Apple and the Apple ecosystem. If you want me to switch from Apple and to stop using their devices, then you're going to need me to stop wanting to use AirPods, to stop wanting to use the MacBook, to stop wanting to use everything that Apple offers in their ecosystem. I don't see that happening. One of the most challenging businesses is the smartphone business because Apple is so damn dominant. That is Google earnings. Let's get into Amazon, which also reported yesterday. So Amazon reported earnings per share of $5.75 versus analysts were expecting $3.14. That is a huge, huge beat. Amazon is now becoming a hugely profitable company. Out of this water, net income just growing and growing. Revenue, however, that's what really caused the stock to take a tumble. Even though their net income is growing, revenue slight miss of $56.6 billion versus $57.1 billion, which was expected. And especially in this market, slight revenue miss is going to cause your stock to go down, even though it probably shouldn't. Big news though, Amazon Web Services reported and their revenue was $6.68 billion versus $6.71 billion. Another slight miss, but Amazon Web Services is now becoming one of Amazon's largest businesses. Why is this important? Why is this an amazing thing? Because Amazon Web Services is one of the most profitable business ventures that Amazon has gotten into, because cloud storage and software in general cost a lot less to produce and maintain, and thus leading to higher margins and leading to more net income. Net income is the story of the quarter. Net income is up 1,000% year over year. I want you to think about that. Net income is up 1,000% year over year, or 10 times what it was. So Amazon is just growing and growing their net income, and that is going to lead to not only their valuation seeming more reasonable, hopefully very soon, but also more people getting interested in the stock. A lot of people were scared of Amazon stock, number one, because of their sky-high valuation due to lack of net income, and number two, because Jeff Bezos just keeps reinvesting all the capital and money that they make into more and more business ventures. Thus far, he has executed amazingly. Amazon stock has continued to climb. Amazon as a company has continued to expand and dominate almost every market that they participate in. And I don't see that stopping soon, but it is nice to have net income. Also, revenue was slightly off, not only because of Forex, as Jeff Bezos mentioned, the Forex transfer rate as far as foreign exchange has been a huge tailwind for many companies this quarter. But also, the reason that they slightly missed on revenue is because their books, their music, and their video is no longer a one-time paid service. It is transitioning into a subscription service. If you don't know, I am hugely invested and interested in subscription as a service as far as the future of the economy. I believe that in the future, almost every company will be a subscription company, not a one-time purchase company. And finally, what I want to talk about is how index funds and indexes in general are artificially high and lying. What does this mean? It means that Apple, Microsoft, Google, and Amazon, all of these companies are so highly weighted in the market and in indexes that when they go up, as they have been doing and skyrocketing, it carries the whole market. But if you were to look at the market in general and many other stocks, a lot of them are highly undervalued. Don't believe what the market is telling you. Look at the valuations. Look at some of these stocks at 52-week lows. Now is a great time to buy. There's a lot of undervalued stocks. If you enjoyed this video, make sure to leave a like. Let me know in the comments below what you thought of Amazon and Google earnings. Subscribe for more videos. And as always, have a great day.